Brendan, I do want to get your sense in on whether or not 2025 would spell good news for Chinese equities, because the way I see it, this is a long drawn-on process. China is facing a lot of domestic headwinds, and geopolitically, whoever comes in the White House is not going to make it easy for China to continue to pretty much, go on the production spree that they are witnessing right now. And especially if it's Trump, then it's even worse. So what builds a case to get into Chinese equities for the foreseeable future, if at all?
Yeah, it's a good point, Tanvir. I mean, this is the sum of all fears. And I think the argument would be that those fears are already baked into these securities, that the valuations of these companies certainly recognize all of those fears and then arguably even worse. So we've seen a really evisceration of the asset class. And there is two people buying right now, and that would be mainland investors via Southbound Stock Connect. That year to date, they've bought more net buys than all of 2023. And the other would be the companies themselves that you see very aggressive buybacks taking place. And why I think that's, and this is particularly amongst the growth stocks, the internet names, but why I think that's very interesting is if you look at the management of particularly the internet stocks, the founder is either the CEO or the chairperson of all of the companies, all of the internet names. And so their net worth is in that stock. And if they thought that the Chinese economy was doing so poorly, or the prospects of their company were doing so poorly, wouldn't they be hoarding cash and not using it to buy back their own stock? So we think there is some positives. It's just coming from a very small set of investors, but we think that could expand over time to include a wider group of investors.
Right. I also want to get your sense in very quickly, Brendan, before we go on,
Sure.
Where are you really seeing value? If investors were to get into the Chinese market, I mean, we heard about state-owned enterprises for the last couple of quarters. I think the buying interest there has reached the brim. We've spoken about, some of the investment-related stories, some of the banks which are still well capitalized, though they might be facing some margin pressure. But where else? Because tech hasn't quite come back in China as one was anticipating.
Yeah, I think within MSCI China, there's one area where you do see some growth prospects where fundamentals are improving, and that is the internet names. At the same time, the valuations of these companies are very, very low. Ownership is very low. I mean, with Amazon's market cap, you can buy all 32 companies in our KWEB, our China Internet ETF, and you'd have almost $800 billion left over. So we think there is an opportunity. And why wouldn't investors just take a piece of their profits from U.S. equities or India or Japan? Just take a small piece of that and put it into cheap Chinese internet stocks, Chinese tech stocks, where we think that maybe there are some positives out on the horizon in terms of the buybacks, the earnings, as well as certainly the potential inclusion of Alibaba in Southbound Stock Connect this September, if they can get their primary listing over to the Hong Kong Stock Exchange in August.